NIO has a market cap of $9 billion and their shares are trading at $4.34 today, and they are down around 48% year to date. Taking a look at Lucid, they have a market cap of $5.8 billion and they are trading at $2.50, and they are not doing much better than NIO these days, seeing a 39% decline since the start of this year. Zooming out, we can see that both stocks tell a similar story of the declining EV excitement as people continue to put their money in AI stocks. But the question is now are these two stocks being down so far? Are they presenting a good buying opportunity at these levels? Well, for my December 2026 price projection, neither NIO or Lucid are expected to turn a profit by then. So for NIO, the revenue is expected to be $16 billion USD, which works out to $8.38 a share. And even though their current price to sales is pretty close to 1, the auto sector's average is 4, so I'm going to use 1.5 for this calculation, which gives us a stock price of $12.57 a share, which is a 190% upside. For Lucid, their 2026 revenue is expected to be $3.65 billion or $158 a share, and even though their price to sales is 9.5, again, the auto average is 4 right now, so I'm going to use 4.5, which results in a share price of $7.11, and that is a 184% upside. For the one-year price forecasts, it looks like analysts are expecting NIO to be trading at $6.19, which is a 42% upside. And for Lucid, it looks like they're expected to be trading at $3.16, which is a 26% upside. On to earnings, both NIO and Lucid have beat 2 of their last 4 earnings calls. Neither of them offer a dividend, and NIO has a debt-to-equity of 159%, which is very high, whereas Lucid's debt-to-equity is sitting around 43%, which is perfect. If we break these down, it looks like NIO has a shareholder equity of $2.9 billion and a total debt of $4.53, which gives us that 159% debt to equity. But even though that is really high, they do have $6.3 billion in cash equivalents, so it's not really that much of a concern when you take that into account. For Lucid, they have a shareholder equity of $4.85 billion and a total debt of $2.4, which gives us that 43% debt to equity, and they do have about $2 billion in cash equivalents, which is good. In terms of revenue and net income, NIO's revenue and net income have been holding steady over the past year, and it's pretty much the same story for Lucid. So overall, really the two biggest differences between these two are 1, Lucid's valuation is much, much higher from a price to sales standpoint, and 2, NIO's debt to equity is getting very high, but they do have lots of cash on hand to cover that. And really, the value these stocks offer for each of them is their future revenue and net income growth, both of which do show lots of promise based on projections. However, just given the macroeconomic EV environment right now and the trends, it's really unclear what the future of these stocks is going to be and what the future of EVs is going to be. But of course, we know that it's times of uncertainty like this that is the real money maker. This is where people make money, is betting on uncertainty. And honestly, it really comes down to whether or not these companies will be able to ride out this storm, and I believe that NIO and Lucid are well positioned to do so, to be honest. So if you think that Lucid and NIO are going to stick around, then these two beat-down stocks could definitely make you a lot of money down the line as they hopefully start to pick up their revenue and net income some more. And just like so many stocks out there right now, though, these two are the epitome of high-risk, high-reward plays. So for me, even given their massive amounts of upside potential, the future of EVs is just too uncertain for me at this point, and just it introduces too much risk, and I don't have a lot of tolerance for that, so I rate these stocks a hold. Current investors should absolutely be averaging down at these prices, but I think potential investors are better off putting their money into something a little less risky at this time. But like I said, if this hits, it will hit big, and I really believe that either, both NIO and Lucid are either going to go very far up or they're going to go very far down, and I think the odds are that they're likely to stick around and go up from here. But like I said, it's just too much risk for me at this time, and that's why it's a hold as opposed to a buy, even given, like I said, their massive amount of upside. So that's all I have for you today on NIO and Lucid. Please drop a like, let me know what stocks you'd like me to cover next, and I will see you next video.